Gold loans are a lifeline for many Indians across the country, and the recent RBI guidelines on gold loans has triggered massive controversy. Political parties allege that the RBI guidelines are anti-poor and it will affect the weaker sections. In this episode of In Public Interest, I'm joined by CP Krishnan, who is the Vice President of Bank Employees Federation of India, and he'll tell us why these guidelines are problematic. So thank you so much for talking to us. The subject that we are going to talk about today is about gold loans. The RBI has issued guidelines regarding gold loans, and they have come up with certain rules and regulations, which many say would affect the poor and the marginalized. So, sir, what is the importance of gold loans in India, particularly, and particularly in rural segments, for the middle class, for people from the lower strata of society? What does these gold loans actually mean?
Gold loan is the last resort of the borrower. See, after exhausting all the avenues, they may ask from the friends, relatives, this, that, and if they have nothing, if nobody is coming for the help, whatever the jewels they have, particularly women and farmers, these are all the people who just lend their jewels, which they use in the day-to-day functioning, and they take loan. Even I've seen some of the people, some of the women, they have even pledged their this Mangalya Sutra, and they will with only with one tamarind they will have that, and they used to pledge. This is how things are going on. And as for from the banker's point of view also, the gold loan is the best portfolio with nil NPA.
The most profitable
with no loss, nil NPA. Even if the gold is not redeemed by the borrower, they have liberty to pledge they have liberty to auction the gold after giving due notice and take back the money. So, gold loan is the most profitable, and if you just inquire, if you just go and see the people, particularly branches in the rural area, whether it is public sector or Grameen Bank or cooperative bank, 70-80% of the portfolio is a gold loan portfolio. So such is the volume with which lenders also use it, and it is very useful for the public also.
So having gold, in home is a minimum guarantee. In case of any emergency, you can rely on that.
Yeah.
You can, make money out of it. You can pledge the gold and, use that for the other emergency expenses. So in this backdrop, most of the Indians are used to, taking gold loans and all that. So now we have a situation where the RBI has issued certain amount of guidelines. And some of the guidelines are like very bizarre. Like you have to prove your ownership for the gold that you hold. Like in what background I think the RBI has come up with these guidelines, sir?
See, they say it's a comprehensive guideline. So from 1964 onwards, they have issued various circulars. Say number is 32 circulars they have issued over a period 6 decades up to 2023. They want to issue a comprehensive circular repealing all the earlier circulars. That is the pose. But practically in this guideline which has been issued, many clauses are completely against the common man's interest. See, like what you said, ownership of the collateral. How I can prove my ownership? Where is the receipt? My jewel at present I am having for decades. 2-3 generations have passed. 50-60 years I am owning it. And my mother, my grandmother's mother would have given to me. Where I will go for the receipt? If not, what they say is it is not simple declaration. Otherwise, you have to decode your ownership. Collateral.
Like who will do that? How is it even possible?
What they mean perhaps is to obtain a notary public declaration like that.
Okay.
Must be. Because it is sworn in affidavit is always, you can sue the people against that sworn in affidavit. So like that people may be driven to obtain these kind of documents. We don't know what is going to be the reality. But the way the guideline says, you have to obtain the document for the ownership. That itself will rattle the people. It will drive them away from the public sector institutions. Where they will go? They will go to non-banking financial companies. They will go to small finance banks. They will go to microfinance institutions. You may say that the RBI guidelines control them also. It is strictly speaking, RBI is issuing guidelines for everyone, whether it is public sector institutions or the private sector institutions. But they are having scant regard for these RBI guidelines. And RBI also does not have any mechanism to supervise, check it and put it properly.
So there is no amount of regulation in terms of the kind of interest that they charge or the kind of transactions that they are involved in.
The NBFCs are free to charge even 18%, 20%. Even the interest cap, 10% spread fixed by the RBI has been removed recently. So now MFIs are free to fix even rate of 36%, 40%. See, you say you take the credit card. What is the rate of interest they are charging for the delayed payment? They are charging 42 to 48%. Even public sector credit card also they are charging. That means Reserve Bank has absolutely no control over the rate of interest, number one. Number two, even if the guidelines of the Reserve Bank are not followed, they don't have any option. Rather, what is happening is they levy a small fine. By deviating the guidelines, these institutions earn a huge profit. Maybe 100 crores, 200 crores. The fine may be 1 lakh, 2 lakhs. So it's a pittance. They will pay the fine and continue to violate the guidelines. But that cannot be done by the public sector institutions. Okay. So the ultimate, the objective or ultimate, the result will be these people, the poor people, hapless people will be driven away from the public sector institutions towards the usurious money lenders and the small prospects.
So given this background, the RBI officials, they know that, if you come up with stringent rules, it's the general public will move towards all these money lenders and they'll get trapped in in the cycle of debt. So why not make these gold loans the rules little liberal? So that ideally that is something that they should be doing. Like, if you want guarantee, if you want to check the background, if you want to find out whether the gold belongs to the person or not who is pledging it, I think there are other ways of doing it. Like coming up with these kind of rules, do you think it complicates the problem?
Really? Actually, what is RBI is doing is like that only. See, in the name of neutrality, in the name of common guidelines, the RBI is practically pushing towards privatization. We have seen RBI is the root cause for the all this upbringing of spring of these private banks, whether in 1992 or 2002 or subsequently also. Now, in this past 10 years, you have seen a lot of small finance banks. Many small finance banks have come, payment banks have come, and the MFIs have grown like anything. All these things is out of the policy of the Reserve Bank of India. And they have also framed the policy in such a way that now the private people, corporates, they need not wait for a decade to get a license. Now, like on-tap license, whenever you apply, we'll give you.
Okay, it's so easy that you get license immediately.
Yeah. And the same treatment is not given to the corporates. Corporates are given a very liberal treatment, and the Reserve Bank is pushing practically. See, why the priority sector lending, which is scheduled, which is defined for 40% of the loan should be given out of the 100% to the common man, 40%. That is not observed by the private banks. No action is taken.
No, it's part of the affirmative action, right?
It's a part of the affirmative action, and it is not observed by many of the private banks. And Reserve Bank is keeping cool. They are not doing anything.
They don't pull up these banks for not following these. They don't pull up
all these things. In fact, the loans that are given to MFIs, microfinance institutions, at the rate of 10%, which they lend it at the rate of 24 or 26%, that is categorized as priority sector, which should not be. Because the end use people are not benefited. Why it should be categorized? So every formula has been changed in such a way. Every guideline has been changed in such a way. Every rule has been changed in such a way that it affects the common man and they are pushed towards the corporates. This is how it's going on.
Okay. So you mentioned about a September 30th circular of the RBI, in which the RBI says that there are some irregularities that are found in terms of giving away gold loans. Sometimes the valuation doesn't happen properly. Sometimes, the customer is not there. And then, with one PAN card or one Aadhaar card, loans are given to different people. So there are a lot of issues with relate to giving away of gold loans. So in this backdrop, the problem lies with the banks.
Hmm.
It's not the common man who is trying to cheat banks, right?
Yes.
The problem lies with the banks. Instead of trying to come up with something that could regulate these banks, now it's affecting the end users. Like the RBI is coming up with rules that could potentially affect the end users.
Correct. Exactly. This is an irony. What they should do, they have issued circulars that business correspondents are employed by banks. And business correspondents, they themselves appraise the credit, they themselves appraise the jewels purity, and they are lending and they are keeping the jewels in their custody, which is not permissible. And now even public sector institutions, they are now having co-lending institutions. And co-lending institutions also, they are violating the Reserve Bank guidelines. These are the violations that have to be checked. And the pawnbrokers, what they do is, they take the jewels, give at the rate of 24% or 30%, and they repledge the loans with the banking institutions and get credit at the rate of 10% or 9%. That means they get a huge margin of 15%. This is allowed by private lending institutions, particularly NBFCs, microfinance institutions and others. And many people are doing it. But for them, there will be a special rate of interest also. Some of the public sector also may do it. So this has to be checked. That is why with the same PAN card, so much jewelry is there. So these are all the things that have to be checked. But the issue is, but what they are doing now presently, they are asking you to verify the repaying capacity.
Like you said, the repaying capacity of a person. Now, who are these people who take gold loans time and again? What is the background of these people? Being an ex-banker, you would know, you would have encountered a lot of people. What is the background of these people?
The people who are coming are hapless people, penniless people. They are daily wages. They don't have permanent income. They don't have any income certificate. 90% or 95% of the 12 loan borrowers are the ordinary and poor people, lower middle class people. You cannot verify their repaying capacity at all. Repaying capacity means income certificate. Then I have to go to village administrative officer and get a certificate. I'm getting 1 lakh per annum, 2 lakhs per annum. I'm getting 25,000. I'll be able to. Why all these things? I am giving my loan. I'm giving my jewels, and you are giving loan against that.
Correct.
Why I should prove my repaying capacity? What is the logic in that? And the loan amount is also maximum 3 lakhs. 2 to 3 lakhs. That is what people are normally. Majority of the loans will be up to 3 lakhs. Why it should be there? And again, purity. Purity is, it is not that stringent. What they are telling is, you need not check purity. The purity will be checked by the lender only with their appraisal. If it is less than 22 carat, it will be equated to 22 carat. If it is 12 carat, 18 carat, it will be equated. Then that is okay as far as I am concerned. That's fine. But they are prohibiting coins not sold by the banks with lesser purity, with 22 carat, lesser than 22 carat purity. So that is to be removed. Why? You are convinced that it is 22 carat, whether it is sold by banks or anybody.
Gold is gold.
Gold is gold. That they have to accept. So that is the another very dangerous condition which I am observing is end use.
Okay.
This is the most dangerous condition. And any consumption loan beyond a threshold limit. What is threshold limit? It will be fixed by each lender. It is left to the individual banks or individual financial institution. They may fix it 1 lakh. Say for instance, if they fix it 1 lakh and you are taking a loan, you want to purchase a bicycle or you want to purchase a two-wheeler, and any two-wheeler is above 1 lakh, 1.25 lakhs like that. And then they may give the loan to the seller. Instead of giving loan to the borrower, they may intended seller, they may give the loan. So that is a very dangerous proposal. And farm credit, particularly agriculture loan, it is categorized as an income generating loan.
Yeah.
And for that, they say the end use has to be clearly verified by the lender, particularly these institutions. That means they will not get the credit and the leverage of using the credit. The entire trade may be given to the companies where they are taking the manures, where they are taking the seeds and all, etc. So this is another danger proposal. So these are all the proposals that are threatening, rattling and frightening the common man. These proposals have to be immediately done away with.
Okay. So if these proposals are implemented in toto, whatever the RBI guidelines are, draft guidelines are, nobody is objecting it, nobody opposing it, whom do you think it will affect the most?
It will affect most of the people who are left with no other option. It will push them, it will ruin their life, day-to-day life. Many people will be deprived of their education, medical emergency, people will die for not getting that loan immediately. And farmers, they will be most affected. They will not be getting, farmer income is itself is a seasonal income. They will not have any income always. Once the crop grows and it earns profit, and they will be able to repay again, they will have to take, because they will not be able to retain that, because the entire farm is only hand to mouth. They are not able to create any surplus for that. So they will be the most affected people. Now, maybe we can say on a rough about 5 crores to 10 crores individuals, households, particularly women and farmers will be affected very seriously. They will be pushed towards the usurious lenders. They will not bother about all these kind of conditions. They will give loan, but the entire the interest gap has to be borne by this.
So, what is the way forward? Like, do you think the RBI should reconsider all these guidelines that they have issued? Because the Chief Minister of Tamil Nadu has approached, Finance Minister Nirmala Sitharaman. He has written a letter. Madurai MP Su Venkatesan has also met her in person and explained to her about all these things. So, what do you think that the government should do as of now? Like, do you think that this is another demonetization kind of a situation?
It is more like that, more or less like that, even worse than that, perhaps. And immediately the government should intervene. The finance minister particularly should intervene. They should instruct the Reserve Bank to withdraw all these adverse conditionalities. What we are talking is only a few. There are many more. So once I repay the loan, you will not return my jewelry on the same day.
7 days, it will take 7 days.
7 days. So again, dangerous class. See, even inspection officials, they will not check the loans, the jewels, where the loan is already repaid. It's closed. So that means that jewels are particular, it can be kept away, it can be misused in these 7 working days. So this is another dangerous class. Many adverse classes are there. They have to be removed instantly. A fresh, comprehensive guidelines have to be there. It should be very, user-friendly, borrower-friendly. All these adverse conditions should be removed. Seamless. Even in the document, in the loan application where you are signing, it is a very clear clause is there. This jewel is mine. One simple sentence is there. That is sufficient. It was all along like that only. It was very seamless. And I was able to get a renewal loan all along. Top-up loan. Now for top-up loan and renewal loan, it is permitted in this guideline, but a lot of conditions are there. Again, appraisal will be there. Again, processing fee will be there. So these burdens should not be there. It's very simple. People should be able to approach any institution, pledge their loan, get the sign one single paper document, get the loan in 10 minutes.
Okay. As a banker, in one line, if you have to summarize the RBI guidelines, what would you say?
These guidelines are the most retrograde guidelines which I have seen in the past so many decades. Ruining the lives of the common man. They should be immediately amended, removed. All these adverse conditionalities should be removed forthwith.
Right, sir. Thank you so much for talking to us and breaking down this complicated issue, because the common man may not understand all these guidelines and all that. But thank you so much for your, explanation. So I'll come back to you if there is more developments on this issue. Thank you.
Thank you so much, sir, for the opportunity. Really, thank you.
Before we begin, I need to pause here for a moment. In Public Interest is a new show on the News Minute where I, along with my colleagues, will be bringing you stories from across South India. If you want a particular issue or a story to be covered from your city or from your state, do write to us on this email address. And also do remember that In Public Interest is truly in your interest. It's you, the audience, who is sponsoring it, and not a political party or a corporate entity. So scan this QR code or click the link below in the description to become a paid subscriber of the News Minute or to contribute to our reporting fund.